This is a new segment, Trade Planning with Options. We have Katie, who's going to combine our cycle analysis with quantitative option strategies. I used to do a show like this when I was on Tasty Trade, and people loved it, putting together our style of analysis with quantitative analysis, and it would be really a great show that we would do. And now Katie is bringing that all together right now, and I think you're going to just love the way that she presents and teaches this information. Show them, Katie.
Hi, this is Katie with askSlim. This is Trade Planning with Options for August 4th, 2022. Today we're going to demonstrate an options trade in Chevron. Let's look at the chart analysis. This is a 5-year weekly chart of Chevron, and there are a couple of important things to note. First, Chevron made its intermediate low here 3 weeks ago, and we're now moving up into the rising phase of this new cycle. Now, because Chevron retraced so deeply in the declining phase of its prior cycle, the probabilities favor not being able to make a new high in this new cycle. So we're projecting up into this area between the 78.6% fib retracement and that prior cycle high. Another important thing to note is momentum. We use our proprietary reversal scout on our weekly charts to show momentum, and when the reversal scout turns green after a cycle low appears to have formed, that helps us to confirm the rising phase of the new cycle. Notice that the reversal scout has turned green here. And finally, I want to comment on the red dashed cycle brackets on the bottom here. That's the weekly cycle bracket for crude oil that we have overlaid on this chart. Crude oil is due to form an intermediate term low right around now. If we take a look at this weekly chart of crude oil, you'll notice that we are right in the middle of the timing window for that to happen, but there is no sign of the bottom being in yet. So that weakness in crude oil might prevent Chevron from taking off to the upside. Now let's go back over to Chevron and switch over to the daily chart. So this is the daily chart of Chevron. Notice that we have positive momentum in this shorter time frame as well. Both the reversal scout as well as the slim ribbon are showing positive momentum. Now timing wise, we're approaching this daily cycle timing window when we would expect the current cycle to make its low and then to turn back up into the rising phase of this next cycle. Now that time period runs from August 5th to August 15th. So what we're looking for is for Chevron to hold this support zone between about 152.40 and 144.80, and then to turn back up into the rising phase of that next cycle, but maybe not get an explosive upside move due to the current weakness in crude oil as it tries to form its intermediate low. Now, if that does happen, we could see crude oil gain strength, and that will benefit these oil and gas stocks as well. So some of the evidence, positive momentum in Chevron across the board, early rising phase of the intermediate cycle, retracing on time into the daily cycle timing window, showing good relative strength against crude oil weakness. Now this all suggests a neutral to bullish directional bias into the beginning of September. The reason I say the beginning of September is because crude will likely form that intermediate low and start moving up, and then these oil and gas stocks could become more bullish and less neutral. Let's go over to the Tastyworks platform and pull up Chevron. These are the available expiration cycles, and the implied volatility in here is around 36 to 37% with an IV rank of 53. Now, if we choose the September 16th monthly expiration, that gives us 43 days to expiration. Let's go in here and we're going to set up a big lizard. This is a neutral to bullish strategy that matches our directional bias in Chevron over that time frame. Now, a big lizard strategy is set up by first selling the at-the-money straddle. Our credit collected is 1405, 1410. So what we're going to do now is take that amount and use it to buy an out-of-the-money call. We want to choose a call that allows for our final credit collected to be greater than the width of the spread that we create. So, for example, our collection on the straddle is 1405. We know right away that we can't choose the 165 call. That would create a $15 wide spread, and our credit collected won't be able to cover that. So let's go and choose the 160 call. That gives us a $10 wide spread, and we collect $10.60. Setting it up this way ensures that we have no risk to the upside if Chevron does take off. Here is the risk graph. No risk to the upside, and our break even on the downside is at 139.40, which encompasses all of the support zone on the daily chart that we expect Chevron to hold, including the 78.6% fib. Now, if you want to make more than just $60 if Chevron does take off to the upside, there are a couple of modifications you can make to this trade. If you'd like to learn more about those, please visit our website at askSlim.com.